global economy continued to expand in 2024 with inflation returning to a more manageable range. The current environment clearly underscores the importance and lasting value of disciplined, long-term investing. Economic momentum continues globally with consumer spending and the service sector compensating for the slowdown in manufacturing. Canada's economy is showing some minor improvements, with economic growth increasing from 0.5% in the first quarter to 1.5% in the third quarter. We'll see if this is sustainable in the current environment. The U.S. economy continued to deliver robust growth supported by strong consumer demand and technological innovation. Growth in Europe remains quite modest at 0.4 to 0.9%, reflecting some ongoing structural and, of course, geopolitical challenges. In global markets, 2024 was a year of resilience, growth, and adaptation. The backdrop allowed our bonds and alternatives to perform within our expectations, while equities far outpaced all long-term projections. These results are really a testament of the resilience and adaptability of companies and economies worldwide, despite the uncertainties faced in 2024. Once again, it reaffirms that time in the market is far more important than timing the market. The steady decline in inflation prompted the Bank of Canada to lower its benchmark interest rates from 5% to 3.25%, a welcome change for many. We expect this rate to continue trending toward a neutral range of 2.25% to 3.25% in 2025. This would represent a level where short-term rate policy neither stimulates nor restrains the economic growth. Meanwhile, longer-term rates reflects a balance between growth and inflation expectations. Their movement in 2025 will serve as a key economic indicator. Higher rates could point to renewed inflationary pressures, whereas lower rates may suggest concerns about an economic slowdown. Turning to the topic of stock markets, North American markets led the way in 2024. The U.S. market was driven primarily by advancements in AI and large technology companies. For example, NVIDIA is now one of the largest companies in the S&P 500 and delivered a rate of return of 170% in 2024. However, equity valuations in the U.S. are now historically high, presenting some potential vulnerabilities, especially if expectations are not sustained. The Canadian market also performed strongly, delivering a balance of value, growth, and income. International markets, meaning all markets outside of North America, fared well despite geopolitical tensions and limited economic growth. Looking ahead to 2025, increased market volatility is certainly possible as elevated valuations intersect with anticipated policy changes in North America, including the tax cuts, deregulations, and potential tariffs. Our approach will always remain disciplined and forward-looking, favoring high-quality Canadian and U.S. companies, maintaining currency diversification to manage global risks, prioritizing high-quality fixed income for portfolio stability, and enhancing diversification and stability through a strategic allocation to alternative investments. We enter 2025 with continued conviction in our diversified strategy and investments. With the upcoming change in the U.S. government and the anticipated Canadian election, we expect a period of market adjustment. It's important to note that while factors such as fluctuating rates, inflationary pressures, and political shifts may influence market behavior, they rarely have a direct correlation with long-term performance. Of course, we'll remain mindful of these developments, but our focus will stay firmly on managing your portfolio with your long-term financial objectives in mind. On behalf of the TWM Group, thank you for your trust, and we look forward to working with you in 2025.